We're going to open up today with a one-year view of the order book because I think this illustrates something that a lot of people are overlooking. Good morning, guys. It's Keith Allen, and today we're going to start here because I think there's something really critical that you need to know. And of course, as always, I'm going to give you perspectives from the bull side, perspectives from the bear side, to give you an idea of how things are coming together here, because there are actually quite a few mixed signals here. So the first thing I want you to notice here is where liquidity is stacked, where it is, and where it isn't. And as you can see, we have right here 55, 60, that's 105 million, another 40. Okay, we're looking at 200 million, over $200 million stacked overhead here, right? In the near range, it's about 110 million. Right up to about 70, 73 and change. And then we go higher up to that 75 level with another 100 plus million. Okay. That's the resistance side. This is liquidity. Liquidity doesn't lie. Now, it does rug sometimes, but here's what we're looking at. You'll also notice that a huge ladder of bid liquidity is now gone. All right. So some of it has floated up. Indeed, and we'll look at that here in a second. But what I'm really trying to illustrate here is how price tends to react to where liquidity is stacked. And if you'll notice throughout history, and I can even take this to a 3-year view to show you even more data on this, right? If you look at history, look how price tends to move or tends to react around the brightest spots on the chart. It jumps from them, right? And that goes up. It also, of course, comes down, right? Down, down, up, up, down, down, down. We get a little bump here. Things get bright up top, pushes it down. Bright spot here, pushes it down. Bright spot here, pushes it up. Bright spot here. We had a little battle here. This, of course, was around the FTX crash. So needless to say, this was and remains our bottom in this market at the moment. And, for all intents and purposes, we expect that to hold. We chopped through here a little bit, and you can see where the liquidity concentrations got hot on the upside. It pushed price down. We finally recovered here, and again, bumped up, but didn't last because of what came in overhead, right? So as we look at this now, look at this one. Boom, 134 million. Pushes price down. We get this big concentration. This was over 250 million here, ladder down here. This was when we were trading in the mid 30s, mid to upper 30s. Would we have like 36 to 38 and a half? We got that retest at 38.5, and then the rest is history here. Near-term history, but nonetheless history. And so what I'm looking at right now and what concerns me is the amount of liquidity that's overhead versus what's below. And clearly, the downside appears to be the path of least resistance, at least for the moment. All right. So let me get a quick refresh here. So with that in mind, I have concerns, and if we look at the weekly chart, even you can see that some of this ask liquidity from above is now pushing down on top of price, right? Trying to suppress and potentially push price down into this range. All right, so let's widen out a little bit more here. Okay, here we go on the monthly view, and let me just expand this chart for you. Get into the sweet spot here, and so we had a decent ladder of bid liquidity. Granted, not a massive concentration. When it was, we were at 60 million right there at that 60K level, and that has since been laddered into both directions. And some of it has turned into market orders. Some of it has disappeared, and now we have kind of a void here. Well, it's not quite a void, but let's do some filtering here to really find where the most important parts are on the chart. If we take out all of the low volume, right? If we filter out all the low volume, and you'll notice that the scaling is changing here, right? So that's something to be mindful of. We're changing the scaling when we adjust this, but it makes it easier to identify some things. So at the moment at full scale, the hottest spot in the chart is about 75 million. All right, so once I start applying this filtering, that's going to change a bit, right? So now the hottest spot in the chart is about 50 million, 50 or 60 million. So now let's just filter out, and this isn't really to determine what the liquidity sizes are. It's just to see what's the most important. And as you can see, let's take it up to about 75%, right? There's like, relatively speaking to the rest of the chart, there's not a ton here. So we're at, 50 million right here at the 75K level. We're at 40 million right here above where we're trading now in the mid 71s, and a lot less going lower and lower. So I think we've got a little bit here in the 69K level, about 9 million. And then, it's really around the 65 level, 65.5, where we start seeing this ladder start to show up. So, it's really hard to be precision when price is behaving the way that it is. So, that is really why a lot of traders, myself included, like to ladder our bids and ladder our asks so that we can dollar cost average our way in and out, scale our way in and out of our positions. And the way I do it, this is not advice in any way, shape, or form, by the way. Neither is anything else on this stream. The way I do it is I try to make my I do. I make my higher entries smaller than my lower entries so that I'm basically building a pyramid. And as I dollar cost my average way down, if I have a bigger bid down here at the 59 level than I have here at the 69 level, that's going to help pull my price down, my average cost down lower. And that's exactly how I'm playing it at this point. So now let's look at the candle chart, because it's not all bearish here. I don't want you to think that I'm biased. I'm just showing you what's in the chart, okay? And so when I put that volume back in, you can see we do have liquidity here, and so it's reasonable to think that we might that support could potentially hold here at 69K, because as we can see in the candle chart, we now have a full candle body developing above that prior all-time high, the 2021 top, which was at 69K. And this has been the battle for Bitcoin, right? We battled our way into it. We tested and failed. We tested and failed. We tested and failed. We tested and failed. We broke out. But these wicks down were, to me, a sign of weakness. We had one full candle body above, and then the breakdown continued, right? And then, we lost the 21-day moving average. We moved back above it yesterday. And at the moment, we're sitting above it. We're sitting above it now. And as price moves up over time, if it continues to move up over time, it will drag this moving average up above this 2021 top, and that would be a bullish thing. All right. So also looking down here at the MACD, that kind of the momentum is starting to reverse, and we can see that materializing in terms of price. What we need to see here is a continuation of full candle bodies above this line to validate a support flip, a resistance support flip. And that holds true for the weekly. Okay. So it can't happen on this weekly candle, but next week we could potentially see a new weekly candle, and for that matter, a new monthly candle growing above this level. Now, excuse me. So, interesting to note that we do have a monthly close that correlates with the weekly close coming up here on Sunday. All right. And last month's weekly close was right around 61.1, depending on the exchange that you're trading on. So, that's a reasonable thing to believe could get tested by the time we get to the weekend, if not before, okay? We have this area of prior historical significance in this 58 to 60K range, which, of course, is still where the lion's share of the bid liquidity is. So that's interesting. That's interesting to note. And if we were to get that correction, of course, we've been talking about corrections happening before the halving, and the halving is coming up really, really soon. Last date I heard is like April 19th, something like that. So if that were to happen, what would that look like in terms of a correction? If that were to happen, that would be from the new all-time high. If we got down to that level, that would be the 20% correction that a lot of people have been calling for. 20% to 40% is really what's been floated out there. You can't hit it perfect, right? So we've come close, but we haven't had it yet. So that is, in my mind a reasonable possibility. And, in terms of what the chart looks like structurally, really, that also looks good in terms of where the 50-day moving average is. It's pulling up also, but it's down there, that 59K level at the moment. And so that's interesting to consider. And, if things were to break down from there, is it likely? I don't know at this point. It seems less and less likely, but, we'll see. If this doesn't hold through the monthly close, then we're going to start talking about ranges down here. I would first look at, the next level, right? The 100-day moving average is down there around the 50 to 52K level, where we had some consolidation right here. And then the big one, in my mind, would be down here at the 44K level, where we had so much consolidation. This still remains, to me, the most structurally sound area in the chart that could support a big leg up. As you can see, it did here, right? So a retest of that would be amazing. Probably a dream target. At the moment, doesn't seem likely that we're going to go there. In fact, as you can see on fire charts, there's really no sentiment to go down to that range right now in terms of liquidity there. There's just, there's not enough there to go, oh, look, you can see that the market feels like price is going to go there. If they did, we would see some bids stacking in that area, and there's, it's just not happening at this point. Now, nothing changes sentiment like price, okay? So if price went down here, if price went down and tested this 60K range and lost it, then you better believe you're going to start to see bid liquidity moving into these ranges down here. That's getting ahead of ourselves. I think we need to focus on what's in front of us right now, and for me, that is this range right here that we're trading in. And as you can see, we're hovering up against this resistance and a lot of resistance overhead. We do have a bit of support in the mid 60s. A bit of support here at 69, right? That looks good both in terms of what we see on the candle chart in terms of technical analysis. Wrong chart. In terms of technical analysis, and also in terms of, where we see a little bit of liquidity in the chart. I'd like to see more at the 69K level to give me more confidence in this, right? I'd like to see more stacking right here to give me more confidence in this. And it's building a little bit. It's starting to develop. That's now, 9.5 million, and it's got a ladder of support below it. But as you know, price could fall through this with relative ease. So really it starts to get more solid around that 65, 66 level, and then on down into the 58 to 60K range is really where the concentration is. I don't know that we'll go here. Our monthly close, we said, was around 61.1, so that's really right about this level. I'd love to see it get tested on the weekend, and let me tell you something. Friday is a holiday, Good Friday, so TradFi markets are closed, and you know what that means? That means that ETF flows will be off. Speaking of those ETF flows, yesterday, the first net positive day we've had in 5 trading days, and that is anchored by a big bump for Fidelity, who had 262 million in inflows, up against, of course, we know Grayscale is going to have these continuing outflows for us. This obviously helps slow the bleeding. But, what's notable here is that, the other entities, okay, you could say, sure, BlackRock had, almost double what they had the prior day, but we're talking low volume here for them. So not a big deal. Bitwise was lower. Kathy Wood's ARK Invest was a net zero for the day. They're sitting on their hands. And so it's understandable that the market is trying to figure it out. We have a monthly close coming. We're not going to see any of this demand come into play Friday or through the holiday weekend, which includes the weekly close and the monthly close. So that's a lot to consider as we head towards the weekend. So if we see price continue to go up, well, then in that case, we're going to be watching what liquidity looks like up here. We see some coming down at this point. You see this here, and it, tip to tail, it drops down. So that's noteworthy, but it's also noteworthy that we're starting to see some move up. You see this block here that moved up to the 64K level. All right, so that's not in mass, but these are little clues that are going to help us piece together what's happening. All right, now if we see big liquidity here and big liquidity here through the weekend, that liquidity could conceivably dampen the volatility through the holiday weekend, and we could just chop through that range. In my opinion, consolidation is a good thing at this point because it builds strength for the next leg up, and that's what we need to see. So in terms of upside potential, let's go back to the candle chart. Of course, we have the halving coming up here in a few weeks. My opinion remains that this long-term, what I call my lifetime channel, remains the glass ceiling for Bitcoin. So let's kind of zoom into this. Let's just expand to this chart right here, right? And as you can see, we have lots of history of big corrections happening both before and after halvings. It can happen in a bull market. Don't be rattled if it does, right? Some of us are, stacking powder and trying to save some dry powder for that opportunity should it present itself, or when it presents itself, I should say. But, we might not get that deep, 30 or 40% correction. Maybe we get the 20% down to this 60K range, or maybe we've already seen it. That remains to be seen. But this channel, in my opinion, remains our glass ceiling on price discovery until we make it through that. Once we get up above that, it's a whole new ball game. But for now, what's notable is that this level changes with every passing day, right? So yes, we know we have resistance right overhead up through that 75K level. And 75K in my mind is more psychological than it is technical at this point. It was technical, last week or so when we were up against that level, but now that level is moving up. So today, for example, it's above 77K. And let's be honest, price could conceivably never make it back into that lifetime channel, and we're still growing, right? We could still cruise along here, right? So that's entirely possible. Just things to keep in mind as we head into the halving, and obviously what happens beyond. At this point, that would be an 80K level glass ceiling, if you will, around the halving, and then beyond that, if we went into 2025 and say things got toppy around the summer of 2025, that's a sub 100K bull run. Everybody's expecting six figures. It's not a given, right? I think that Bitcoin will eventually get there. I do think that Bitcoin could eventually break into this, whether it happens before or after the halving, or it doesn't happen until next cycle, remains to be seen. But just know there are no sure things, and that this remains and will remain resistance until we confirm a resistance support flip above it. For now, we're just working on getting a resistance support flip confirmed above this. And in my mind, that takes not just daily candles printed above this level with no wicks. It's going to take weekly candles printed above this level with no wicks. And come Sunday afternoon, we'll close the week and the month and have the potential to see monthly candles up above this with no wicks. That's how you confirm and validate the resistance support flip. All right, so hope that gives you a lot to chew on heading into the remainder of the week in terms of economic numbers on the calendar. Not much happening at this point. However, later in the week, we'll see. Of course, we have our jobless claims and GDP and PCE coming in. But on Friday, notably, when TradFi markets are closed, we're going to see some new PCE numbers come in. So that could potentially create some volatility. Oh, and we'll have Powell speaking that morning as well. Oh boy, Friday is going to be a big day. So be prepared for that. I expect volatility to continue through this week and into the weekend. So keep that in mind. It's really a time for patience, and most importantly, for risk management. You really want to not be aping all in into any position, in or out. I think it's important to scale your way and exercise some patience here, right? If you're a long-term investor, chances are you're going to be okay. If you're trying to snipe the lowest of lows or the highest of highs, it's really difficult at this point. So just be cautious and calculated. Choose your levels, choose your targets, and stick to them until you see a reason to adjust. And the reason you want to do that in advance, if for no other reason, is to take the emotional decision-making out of the equation. You don't want to be forced with making that decision in the heat of the moment when price is moving potentially against you, okay? Or if it's moving with you, right? Don't get greedy. That's the name of the game. Stay in it for the long haul. Risk management for the W. As always, nothing I say or share here should be considered trading advice of any way, shape, or form. Trading is risky. Do your own research and manage your risks so you stay in the game for a long haul. Got a live stream coming up in a couple of hours, so I hope you will tune into that. I will post a link in the channel before we start, so I hope you guys will join us for that. It's always a great conversation, so looking forward to that one as normal. Have a great day, my friends, and as always, trade safe.